All right, guys, let's go ahead and get started. Guys, go ahead and give me a sound check, and we'll just get started. Let me know if the stream's working. It seems to be doing something weird, I see, but guys, let me know if you can hear me all right, and then we'll get into these charts. And we will, I'm kind of waiting for confirmation from you guys because I see in my thing it looks like it's not showing up in the video. There seems to be about a 12-minute delay, it looks like. Okay, cool. For some reason, I see in the little YouTube portal, it just shows that transition screen with the countdown timer. Doesn't actually show. Normally, it shows the chart up there, and I don't see it, so I don't know. It's weird, but okay, let's get into the charts. Triple Qs. We'll go through the broad market. We'll look at individual trade ideas that you guys want. Just leave a comment down below on in the comments area on something you want me to look at. And by the time I go through everybody's charts, we'll typically wrap up. So, so triple Qs, I mean, the biggest picture when I look at the daily chart, was this downtrend line here. All right. And we're above it. So that's it. No reason, at least from my perspective, I didn't see a solid reason to go home short into the weekend. It just, we'll pick it up next week. And that's it. Basically, the last couple weeks, really, we shorted this big drop here. Okay, we caught that, pretty much most of that. Covered the short as it hit this support line because, again, that's big support. All right, that's the whole year's worth of support right there. That's your trend line going back to January of 23. And so as we hit that trend line, if you're shorting, you want to cover into major levels of support. If you think there's a bigger drop coming, great. You can hold out for it. But in that situation, if you're willing to hold a short at support, then you have to be willing to ride the counter trend bounces because ultimately you're looking for a longer term trade. But yeah, there's support and we hit it again. So covered that. It bounced. When it ran into resistance right there, all right, that's where I said, okay, it's probably an objective area to start to build a short position again, looking for a drop. We didn't get the drop. It started to break out above that. And now if I go down to the hourly, it started to break out. And at that point I said, okay, guys, and it was at 33 or 377.50, I believe. As I said, it probably makes sense to cover. We'll just, it just wasn't working, shorting right here, covering right about there, take a small loss, but ultimately it wasn't, the short didn't do what it was supposed to, so no reason to remain short. Now on Friday, for the private member group, I did post a trade that did turn into a decently profitable trade. And I had to go down to the 5-minute to show it, but on the 5-minute chart, this is the trade that I posted to everyone on Friday. That was in the private member group. Whether you took it or not, I don't know. I did. But you have negative divergence on the 5-minute. Now, this is day trading stuff, and you have this. Really, I was watching this trend line here. I could see that, all right, they're establishing a trend line. All right, it broke, gapped up. But ultimately, once it broke again for the second breakdown, usually, that's a pretty solid move. I actually started to step in right up here because once I saw it way up here, I figured, okay, they're probably going to sell this thing down at a minimum down to support right there and then ultimately break. But the trade that I posted was, okay, guys, we're starting to break trend line resistance, or sorry, support on the 5-minute. And what it did is it broke down, hit that support level. You can see there's some support there. ran up for a back test, and it was objective right there, a very objective short on the back test. If you took that, then basically, towards the lows, almost 9/10, almost a 1% trade. I was looking for a little more downside, but ultimately, as we started to drop, it, that you could take profit there. Didn't look like we were going to get down there towards the end of the day. Where I think we're probably heading is down here, this 373 area. But, to close the week out, a couple of reasons why I closed my short out is, one, I was looking for the move intraday to hit that 373. Clearly, it didn't look like we were going to get there, especially towards the end of the day. You're just not going to drop that far, towards the end of the day. So that's one thing. And then two, just back on the daily chart and really the hourly, we're above that downtrend line. So there's no reason to remain short into the weekend, especially, I caught that little trade to the downside, took the profit, and went home flat. Okay, so that's that on triple Qs. NASDAQ futures has a little bit of a different look. Let me go ahead and see if we can look at this one. Yeah, this is what I have on the. It's actually not much. It's about the same. NASDAQ futures on the hourly chart, where you can see popped above. There's the downtrend line right there, popped above, closing basically above. They hit that support and bounced off of it, and it's above support. So no reason to remain short. Although you do have this bearish rising wedge right here, and you can see we did break that. So what I'm looking for to reestablish a short, just to be very clear, in case anyone's interested in that trade, then what I would be looking for is a drop, really taking out Friday's lows. All right, you take out Friday's lows, you're going to drop back down into that trend line, that downward trend line right there. And then also that's going to probably signal this bearish rising wedge. It will play out to the widest. The major target's the widest part of the wedge, and that would be from the point of the breakdown. Oh, sorry, guys. Hit the wrong button on my mouse. On the widest part of the wedge right there. All right, and that would signal a move all the way down to around 14,900 or something like that. Okay, so that's what I'll be looking for, is taking out Friday's lows will probably trigger another sell signal. And then back on triple Qs. Not the same on triple Qs. Friday's lows won't do it for me. Really, I need to see them drop back into this, back below this trend line. You get back below the trend line, you should, very high probability, you head back down to the longer term support line, which is, obviously down there. And then that would be the short, all right? So sell signal taking back the trend line and then fall down to the support. That would be the short, and then I'd want to cover. And then ultimately, maybe you get a bounce, maybe you don't, all right? You break the trend line, that's a bigger sell signal. Okay, we break that long-term trend line. Let me go to the daily. There's the long-term trend line. We break that. That's indicating, a longer-term trend reversal. Not just a little minor pullback, but likely a longer-term trend reversal where we're going to, start to, trend lower over weeks, months, stuff like that. All right, that's all I have on triple Qs. That's pretty much all I have on that. And then we can look at Apple. A couple things on Apple. Bearish rising wedge. All right, the widest part of the wedge, it does look like it was actually hit. This is the measured target. There's the widest part of the wedge. And, you take that. Well, the breakdown point was right about there. We didn't actually get to it doesn't look like we got to the, one thing is, I guess, this is not really the widest part of the wedge because I can't quite make it right here on that one. It's really right about here. So let me kind of readjust that. The widest part of the wedge is really about right there. And the breakdown was there. So pretty much your major target, yeah, we hit that pretty much right there. You can see, well, the major target. They stepped in just slightly early, but basically right there, we hit the major target. So maybe that's it. There's this gap to fill. We're so close. I think we're probably going to fill that gap next week. Maybe just Monday pop up right right at gap fill resistance and then sell down. Maybe pop it slightly, then sell down. You should get a reaction whether you pop it and sell down, or you just hit it perfectly and sell down, or maybe even a little bit early and sell down. That's why you typically want to, if you're looking to short something, you want to step in a little early because, again, you don't know exactly where you're going to get the reaction, whether it's a little early or whether it's a little bit above it, but you should get the reaction. So sell down, and then support would be about this 187.50 because that's your gap entry. So I think that's a trade. It's not a huge trade, but somewhere anywhere from there down to there, it's about a 1.5 to 2% move that you should get. Okay, so I think if they pop up and hit that gap fill, it would make sense to establish a short for that trade right there. All right, that's just a potential idea. So that's Apple, Meta. That one, it's at resistance right there. All right. 302-ish. So I would expect we're probably going to get a pullback there. What else is interesting? Google at resistance, bearish rising wedge. This one is starting to put in a bearish rising wedge there on Google. Negative divergence. Looks like a good trade setup. Not fully actionable. Now, one way to play these wedges, there's a couple ways you can do it. One, the conservative way is to wait for a breakdown of the wedge. All right. When you break that, that's the sell signal, and then your profit target would be the widest part of the wedge, which I have a right about here really. So the trade, whenever you break, and then widest part of the wedge. So maybe somewhere down there. I don't know when we're gonna break. Probably right about here. I would say these most recent reaction lows would be my target. I think that would be that lineup. So 115.50-ish. So that's one way to play it. The other way is you can short at resistance, and that is basically where we're at right now. But one thing sometimes what they like to do on these bearish rising wedges, when I say they, I'm talking market makers, the algos, they're programmed to run stops, basically. That's how they basically make money, is running stops. And so one thing they like to do sometimes is run it to the upside, then reverse and bring it down. All right, so a little higher risk to take a short at resistance, and it also can trade. It can also just backtest for a while, grind around. You never know, but higher risk, higher reward. One way to kind of mitigate that risk or manage it is take a partial position at resistance and then add to it on the breakdown. That's one way to kind of average out your risk and average out your reward. Okay, so that's Google. And Microsoft. Let me see what's going on. I haven't looked at this one for a while. I think it's back testing. Looks like it's kind of back testing resistance. Yeah, looks like it's back testing some resistance. So again, a lot of these things are at resistance. That's why I'm thinking we get a pullback. Maybe we pop just barely up next week. Apple fills that gap and we get that pullback. That's what it looks like is going to happen. But no point in just going home on a long weekend. For me, I just figured go home over the long weekend flat because the market's not open on Monday. All right, guys, that is it. Kyle, appreciate the super chat. I'll get to yours first up. And I think that's all I have on the tech sector. One reason, guys, why I really focus on the tech sector is just because the heavy weighting, it's pretty heavily weighted in the S&P 500. So usually you get the tech sector right, you'll get the market direction right, just broad market direction. Semiconductors, no sell signal. Again, we need big sell signals, which is break of that support. We just don't have it. But we do have negative divergence, so I think we're going to get it soon, but it doesn't mean that we're not going to diverge more. All right? Negative divergence doesn't say sell signal, breakdown now. It's a setup. And so if we we could pop over the recent highs, put in a new divergent high, then come down. The longer the divergence builds, usually the bigger the move, but divergence doesn't give us an indication that we need to short right here and now. So that's it, guys. One way you can play it, if you're a very active trader, let's say you get a new divergent high here, all right? You get a new divergent high, you're very likely going to get a pullback. And the pullback would most likely come down to major support. So in this situation, we pop above those highs right here, which is about 358, pop above those highs. Then you narrow down your time frame to the hourly to hone in your entry, all right? So in that situation, let me kind of clean this up just to kind of show you how you could trade this, because I can't always just point everything out. It's really hard for me to just be Johnny on the spot all the time. Not like I'm always am, but then you'd like look at something like this and say, okay, here's our hourly trend line. All right, you look for divergence to start to build on the hourly, and it will very most likely if you have it on the daily. And then you look for the breakdown or sell signal on the hourly. And that would give you the most early entry, and then that should bring you down to the major trend line. You cover your short down there at major trend line support, and then if it breaks, you get another big sell signal, and you can re-enter for a longer trade because you just broke the major trend line. Okay, that's that. Let me start with Kyle's GDX. He wants to look at these miners. If rates are going secular higher at support, would going long miners be big picture a losing trade? Well, possibly. I mean, long miners be, time frame is obviously important. We can look at the rates. Rising rates are typically bearish for gold. However, rising rates are also typically, and it should really play out. I mean, you guys just think about it. The mortgage market, if anybody's aware, is pretty much like shut down. I mean, we're at all-time lows in mortgage applications or 30-year lows. I know, as a homeowner myself, you're kind of locked into your home if you, there makes no sense to sell your home, all right? If you're looking to sell your home, you're probably better off to rent it, all right? That's one thing. And then, so the rising rates are bearish for economic, it's the cost of money. As the price of money to borrow money goes higher, it incentivizes you to borrow less and save more, essentially. So it slows things down. And so that's bearish for the economy in general. Well, if you see an over-leveraged economy with high interest rates that can't handle the interest rates, then you could see things come crashing down. And typically you go back to most of the bear markets and recessions, it's due to rising interest rates. So you could see things come crashing down. And if that happens, gold oftentimes acts as a safety play. You'll see, and the way it likely could work is, here's the one scenario I've been pointing out, right? On the daily chart, our former high in rates is right here, October of 2022. You look back where the stock market was at in October of 2022, and we're basically in the depths of the bear market. Now, we're just off those highs, and the market doesn't care, essentially. Okay, that's fine, because the market's been there, done that. They've seen these rates, they said, okay, the economy seems to be able to handle these, rates up here, roughly. And so their market's not paying attention. However, you pop these highs, and all of a sudden you get into a new range of interest rates, and the market very likely is going to freak out. All right, I would put a good probability that if you see rates up in here, the market's going to be freaking out and selling off. As the market sells off, money comes out of the market. There's outflows, and where does it go? Gold, bonds, basically. So in that situation, you could see money flowing into gold and into bonds. Now, the miners are a different thing, obviously, because they're stocks. They're indexed, or at least some of them are. Newmont is indexed to the S&P 500. Barrick Gold is not, and not all the miners are indexed, but if you do see a pullback in the miners, it's very likely a very short-term thing, because if gold is rising, that's the product that these miners are selling. Then you probably see oil falling too, which is the major input cost for the miners. Then you're going to have falling oil, you'll have rising gold, and that's margin expansion, essentially. All right, that means they're going to be more profitable. So pullbacks in those miners, in those impulsive moves down, because the broad market selling will likely be buying opportunities. That's fundamental stuff. At the end of the day, we'll use the technicals. We'll see what, the charts tell us what's in there. And so we'll look at that. And then obviously the bigger picture is it's really hard to be long-term bullish when I see rates just continuing to rise on a nice steady bull trend. All right. You can have little pops in the market, and at the end of the day, the market likes to suck in, bag holders basically. So maybe that's what we're going to see with a new marginal high in the market. But if interest rates start to make new highs, believe me, I'm going to be on it. I should be, we'll be on that short-sided thing, looking for that drop. Okay, so that's interest rates. And then obviously you can't get away from the weekly picture. I mean, I don't make this stuff up, all right? This is not me telling you guys what I think the market, like what it's doing. This is the chart telling me 1981, all right? This is your 10-year. This is falling interest rates all the way since 1981, all right? Every time, there's another one, okay? There's another one. So it validates my channel. This is COVID. This is Operation Twist, I believe, is what they call it, QE2, QE1. This is the Fed artificially manipulating the interest rates and each time, all right? Well, now we're way up here. The Fed is raising interest rates to try to fight it. They want to see this thing get back into this channel. And okay, maybe they do, but the only thing that's really going to allow interest rates to get back into this channel is one, if the Fed starts rapidly cutting interest rates. They have to go back to zero, all right? And that likely wouldn't even do it. They'd have to go back to zero and pump a bunch of QE and buy bonds, and so more QE. If that happens with the environment that we're in with inflation, then you're going to see, inflation, like the trade would be a massive inflation trade and commodities and all that. So that's one thing. All right, interest rates are rising. They're not falling, they're rising, and there's no change in trend. We do have potential, we do have some negative divergence on the weekly. So, but that's a weekly. I think we're going to pop, guys. I think we're going to pop, make a new high. I think the market's going to freak out, and then I think interest rates can start to come down. All right, that's that. And then GDX. We go to the daily here. I have to kind of clean this chart up. I haven't been super hot on gold recently. It's not going down. It's just not really going up. It's kind of chopping around. See, I don't have any negative divergence. That was kind of taken out. So I have to, bullish divergence. I don't have any of that on the PPO. It's slightly there on the RSI, but not well defined. So that's one thing. Yeah. I can't, to me, it kind of looks like sideways action, maybe consolidation, bigger picture. You got some support right over here, right down in this range. It looks like some support's about 27. We recently came close to that right there. Maybe, I'd like to see it, if it comes down and hits that and puts in the bullish divergence, that's going to look a lot more promising. We'll have a bullish setup. Right now, I don't have a bullish setup. It's not bearish per se, but I think we're probably going to come down and build some sort of a bullish divergence. So maybe a little lower there. And then obviously bigger picture. I mean, bigger picture. If you really want to look at gold, I mean, I don't know what if you guys are interested, this is it's not a cup and handle, but it's a rounding bottom. So this is a 2001. All right, this is an accumulation pattern, this rounding bottom, and then you're kind of consolidating. So bigger picture, you pop those highs right there, 2090 or so. Not just a little pop. We need to break them. Then the major target's going to be the top of the this rounding bottom pattern, which is about, we'll just go with right there. We want to be conservative all the way to the bottom, roughly. And that would be your major target from the breakout point. So I almost have to go to the monthly maybe to make this line up. Okay, see if I can actually, yeah, right there. And that would, the major target, sorry guys, it's not always easy to look way out. About $4,000 in gold, all right? That would be potential major target. Okay, that's enough on gold. Covered a lot of that, so. Watch Newmont as well. You know, you start seeing bullish setup in Newmont. That's your largest miner, so it will influence the sector. NEO. Let me get back down to the daily. Am I on auto? Yeah. Okay. So your buy signal on NEO was right here. All right, there it is. Bullish falling wedge, bullish divergence, breakout of the pattern, buy signal. All right, it's just repeat. You know, we look for these patterns. We look for the entry or the trigger, the sell signal or the buy signal, and then you manage risk. Your buy signal was there. Almost did a back test. You've got some resistance right up here, so this looks like support right here. All right, bounce off support. I think that's support, and I could see this running up to that trend line, so I think that's a decent possibility. That would be a 50% move. Let's look at the hourly and see what we have going on in the most recent time frame. Let me kind of clean this up. See, divergent low on the hourly. See the right there. See the momentum? It's moving up on the hourly, okay? And yet price gap down on earnings. That move down on earnings was a divergent low. They bought it up. Divergent lows often will get bought up. Same with divergent highs will often get sold into. They bought it up. I'd lean bullish on this, and I would be bullish. It's really not a bad setup, to be honest. It looks pretty decent. I'm gonna add this to my long list, and we'll see how that opens up on Tuesday. Potential long idea there. EL. Estee Lauder. Divergent low on the daily. On the PPO. Bullish PPO crossover. Yeah, you have bullish divergence on, you know, you have it on the daily. Let's see here. And this is the thing, you know, I'd be looking, I want to go long the ones that, you know, this is down from the high 60%, right? So I don't want to go long at triple Qs when it has negative divergence on the daily and it's, you know, just marching forward. To me, that's kind of the end of the move. I want to get positioned early in moves. This one, I can't make a downtrend here. Likely something like that would come into play early on. Let me go down to the hourly. So I'm going to have to probably just go with that, basically. It's the best I can do. It's not my favorite trend line, but on the hourly, support. So again, remember, you need to see a breakout above resistance to trigger a buy signal. So watch for that. It's on the daily, it's got a good setup. It's a bullish setup. You don't have a buy signal yet. Netflix is still holding that support. I looked at it on Friday because this is another one I'm just looking for kind of broad signals that the tech sector is selling off and breaking down. So this is just one I'm kind of eyeballing. But here it is. Bearish rising wedge. Negative divergence. All right. Again, the most recent high right here was a divergent high with a high probability that it will be sold into. Right there, that was sold into. Hit support, bouncing off support. Maybe it goes on to make another divergent high, maybe not. I don't know. I'm not interested in trading this right here, up here or down here. I'm not. maybe you could take a short at resistance. That's the way I would lean because of the negative divergence. I'm interested in when this breaks this trend line. Okay, you get a break of the trend line, and that's a sell signal. Widest part of the wedge is here, and that would, I don't know when it breaks, guys. So you know, it's hard to measure up, but maybe somewhere down around here. Maybe it goes on for longer. I don't know when it breaks, but when it breaks, your major target would be the widest part of the wedge. So waiting for that sell signal. Don't have that yet. URI, United Rental. Divergent high. Not confirmed. What you want to, ideally, you see these divergent highs. I don't like to just short a divergent high. What I want to see is, okay, does this remain a divergent high? What I mean by that is the price is heading up. Okay, if the price continues up, the PPO is also heading up. It's going to continue to go up, and eventually it would take out the divergence. And then all of a sudden, you have no bearish case. I don't want to be in a position which is bearish, then all of a sudden just is not bearish anymore, and I don't have any levels to trade against. So what I want is, okay, if this runs up and make a new high, it will be a divergent high. Does it remain a divergent high by confirming? All right, does the PPO turn down? Does it come up like this and then turn down? And okay, it confirmed the divergent high. Once I have that, okay, now look for break of trend line support for an entry. All right, and in this situation, you know, it's kind of sloppy. Maybe this, I don't have a very clean trend line. I'd probably go with that and then narrow it down to the hourly to maybe grab this uptrend line. All right, so that's how I put those together. SMG, that's semis, right? Oh, Scott's Miracle-Gro. I was thinking SMH. At resistance, it looks like. Yeah. At resistance. Had this wedge here, looked bullish. I guess he did get the breakout, you know. Gappy, huh? Earnings, guys, you got to watch out for earnings. I mean, sometimes it just makes sense to go flat on a position into earnings or wait till after earnings. Gap down, I think it's at resistance, breaking back down on Friday. Negative momentum, negative price action. That's all I see. I just see a downward trend. I don't see any indication of a trend reversal. Okay. Wheat. Wheat still looks good. I'm still long wheat. I've been adding to it. I was adding to it a little bit last week. Not huge amounts, just kind of sprinkling a little here, a little there. Not any one large buy point. Just building a position back up. Again, even though wheat's down, for me, it's at least been profitable. Now, if you're a long-term trader and you just buy something and hold it, one thing is, guys, rising interest rate environments is probably not the best for buy and hold traders. Buy and hold, the philosophy of buy and hold works great when you have interest rates falling since 1981. Okay, that they're not falling anymore. They've broken that trend. Now, if that trend's recovered and we get back into that trend, fine. Okay, can make that case. But right now, rates are rising, so very likely not going to be very favorable for buy and hold traders. So if you're buying and holding something, you know, it's probably either going to be dead money or you're going to end up just getting chopped around. On this one, though, we were kind of buying, I think I was buying it back in here. I believe I used to have a trend line that was kind of like this, and I was buying at support. I think I bought some all through here, which, again, is more aggressive. And then it broke down, and I figured that the breakdown would be a false breakdown because we had big bullish divergence, and it was. And then, boom, popped right to the 200 right there. Okay, I covered, closed out my trade, my long trade. So even though I was buying it and telling you guys I like it for a long time, And a lot of people said, oh, it's not working. It did work. You just have to know when to take your profit. All right, boom, take my profit, fell back to support, re-entered the trade, boom, took my profit again. I didn't short it though. Okay, I haven't shorted this thing because it's got bullish divergence. I'm really more interested in buying the dips. Came back down. I think I started buying it, oh, I don't know, maybe right here, and I've been adding to it. So I added and added. Maybe I'll add a little more, but yeah. So it's at support, should bounce off this support. Maybe it has to consolidate here for a little bit. You can also, if I narrow down, it looks like it's going to do what I expect. The most recent lows, right about this 590 area, all right, right there. We closed on Friday, 592. Monday, you might gap down on Monday, just a little bit, marginal gap down, maybe 580, something like that. That would be a divergent low, and we'll look for the buyers to step in, and that's probably going to be the end of the drop. I think we'll probably get bid up from that point. So just wait for it. We'll see if it actually does that. Otherwise, we look to stop out. But I mean, wheat's only going to go down so far. This is a commodity, and wheat doesn't go to zero. It's it's commodity. So, and then here's the wheat futures. If I see the wheat futures here, okay, so you can see support, 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 right at support. So yeah, I think we're probably gonna maybe put in a divergent low, but yeah, that's what I'm thinking. Big bullish divergence, and that has not been taken out. It's still bullish divergence, so a little bit move. Maybe a stop raid. That's what I'm thinking. Pop down, stop raid, rally up. So we'll see if that plays out. SOXX, that's the same as semiconductors. I already covered the SOXX. Pen and Etsy. What's a pen? Let's see here. Pen. Sorry, I was reading some comments that guys were saying on we downtrend. Is this gambling? Movies and entertainment? Oh, okay. No change. It's in a downtrend. You have some bullish divergence, so more of a bullish setup, I believe, but there's no buy signal. So your bullish divergence is here, and it's there on the PPO. No buy signal though, so you need to break it. You need to break out. That was a breakout, but man, what a doozy, because the bullish divergence was technically there, and it broke out on earnings. So definitely like a buy signal, but just didn't work out, So again, these trades don't always work out, guys. It's just one of those ones that I would look at it and be like, no, I don't know, just didn't work out. The chart looked good, but didn't work out. So don't load up on any one position. Even if I really like something, it doesn't make sense to just dump your whole portfolio or all your money into one trade. Because if you get it wrong, or if I get it wrong, I don't need you guys sending me hate mail. All right, we all manage our own risk. So that's that one. And then what was the other one they wanted? Pen and where's that other one? Etsy. Yeah, I don't really like it. It's pretty oversold, so you could definitely see a little bounce, but I don't see any real clean indication of a trend reversal. I see kind of a downtrend, and I don't see any indication of a trend reversal, although you could very easily bounce from here. On the hourly, you probably have some bullish divergence, so you could bounce up to what looks to be maybe a trend line here. It's not a trend line because I only have 2 data points, 1, 2, so I can't validate it. So I wouldn't treat it as the be-all, end-all. I don't see anything here. Personally, I wouldn't touch that one. Disney. Yeah, what's Disney doing? Hmm. What are we hitting? Some support. COVID lows right there, guys. So, I mean, look, what's going on with Disney, right? This is like, what's going on with Disney? Disney's a big conglomerate. You know, like, the parks, people aren't going to the parks. I mean, what's going on with Disney that is causing them to be hitting the COVID lows? The market's tricking people right now. You've got 5 stocks maybe kind of holding up the market because of the weighting. It's not because that, it's just because they're weighted so heavily that 5 stocks are holding the market up. Meanwhile, the rest of the market's deteriorating, or a big chunk of it is for sure. This is an example of that. Hitting the COVID lows. Something's got to give. Either this needs to rally and play catch up with the tech stocks, or the tech stocks are going to sell off. And I'm leaning that the tech stocks are going to sell off because the divergences on the daily chart tell me that that's likely going to happen. All right, the negative divergences on the daily chart. You actually have big divergence. It's been building for a while. Even right there is a divergent high. So, oh, sorry guys. Anyways, all right, let me move on. Bank of America. Again, look at Bank of America. Not near the COVID lows, but clearly in a downtrend. Okay. We're gonna go ahead and say this is our downtrend. Somewhere, I don't know. We'll go with like that. I don't know. It's the trend line's not perfect, but clearly in a downtrend. No divergence. See this? See the momentum? It's moving up. Okay, that's great. But we're not making divergent lows. Here's your low price, higher low, higher low, higher low, higher low. Momentum moving up, price moving up. So in the short term, that's a little, in price, that's a short-term uptrend. But ultimately, the big downtrend is that, and there's no indication that there's a reversal taking place. It's just a counter trend route, kind of a counter trend move. Hit that. I think that counter trend moves over. I think we're going to take out these lows and make new lows. So yeah, watch that. And then the big, as I'm looking at that one, JP Morgan. Next week, this one, I did not take a short on it, only because I just didn't see a definitive clean breakdown. This is pretty decent in terms of like an impulsive rejection, but they still closed it right within this little tiny flag that they're doing. I'm waiting to take that flag out. We take those lows out, boom, that's your continuation and in this bear flag, and it's probably going to be, I don't know, something like that. Bring it down to, yeah, we'll say here's this one. Extend that out. Bring it down to about 138. All right, so that's what I'm waiting for. Just a little more downside, and I'll short this thing likely down to 138 in the 200-day. But bigger picture, you've got a bearish rising wedge. You've got the widest part of the wedge, which I think is here. It's about the, okay, breakdown here. Yeah, so that'll 124 actually is where that one lines up. So yeah, I think you probably do, it's probably going to go like this. Break, hit the 200. There'll be some buyers there. You probably get a bounce, maybe a back test. Maybe not. I don't know. So, run down to here, probably cover a short if it wants to bounce. Okay, and then you can look to sell the rip. So that's objective to short, maybe right in there, and obviously objective on the back test, and a continuation down to the major target. I'd be leaning this way. All right, just because of the major target. We don't have negative divergence though on that one. So, that's one thing I don't like to see. There's no negative divergence. So, because we don't have that, maybe it would want to back test and then have a divergent high. I don't know. In the short term, guys, a move down to that level 138 would probably be the trade that I'd be looking for with just a little more downside. And then beyond that, we'll have to let the chart show us. All right, what else do I have? Upstart and Affirm. Aren't those about the same? Is Upstart the housing one? Is that what it is? Or are these kind of the same? Well, there's your sell signal breakdown, flagging out. Probably more downside. All right, so, and then Affirm. Hitting resistance. Oh. We're running into resistance. It's a divergent high, but it's not confirmed. So I'd look for the PPO to turn down, the RSI to turn down. Then you'll have something like that, which means this would be a divergent high, and that will be a high probability to get sold into. So for a sell signal, you go down to the hourly chart. And I don't know, I'd probably just take that right there. Look for a break of that trend line. That would be your hourly, that would be your sell signal. And then at that point, you're probably going to have a decent pullback. I don't know, maybe down here, maybe not. I can't make a trend line there, so. So that's that one. Like you're likely going to get a reaction right here. If you get the hourly sell signal, boom, right there. Support's right there. That's obvious. 1960 or so, 1970. So I think that would be the initial move. Likely going to get a bounce there, but that's still a 10%. Probably get a bounce. Could bounce back up to 2140. You just have to wait and see where it shows that resistance is at. And then likely a continued move down. Okay, next. And Amgen. All right, I'm just going to cover one stock. If you guys are putting out two, I'm just going to do one. You just got a big sideways trading range, and okay, something like that. And down, it's not super clean, but I would say in this range, big sideways trading range in the middle of the range. I have no idea. It's not objective, long or short. SMG and CVS. I already covered SMG. CVS down. Coming down to some support. There's support right down here. Okay, earnings coming up somewhat. You got some support right down in this range at about 63-ish. Okay, that's your support. You don't have any divergence, but if it drops quick, go like this, boom, that'd be a divergent low. Look for the confirmation. Then you would have, if you get that, you'll have bullish divergence at long-term support or at decent support. That's what you want to see. That's objective to buy. Right now, I think there's probably a little more downside. And again, just because it drops to 63 doesn't mean it's objective. It would be objective because you're hitting support, but it's even better to have some bullish divergence. And you don't just, you can buy it at support for a bounce, or you can wait for a breakout of some sort of a resistance line. I don't have very clean and clear downtrends, so probably just take a shot at support is what I would maybe do. But MasterCard, that one's still rallying. We're at some resistance. Let me just see what we got. I can't make that. So yeah, I've got this bearish rising wedge here. Yeah, I got a bearish rising wedge at resistance. Probably going to get a pullback. Still divergence. this one's just kind of hanging in there. We need to see Visa break. Visa has negative divergence. It's a divergent high. I think they're going to sell into this, back down to support, and then we wait for that break. I stepped in a little early on this one. But it still looks okay, so. Need to see it break, though. We need to see it break. We need Visa. Visa breaks, MasterCard's going to break. AXP is another one. That's American Express. I think that one's... Oh, yeah. See, that's right at support. Yeah, that's sitting there at support. All right, so that's objective. I mean, the buyers are likely going to step in here, guys, on this one. But the others, I think, are going to break. So you probably get a little bounce here. The other ones are going to break down to support. And then we need, ultimately, they all need to take out these trend lines to trigger a longer-term sell signal. All right, that's that one. Okay, I'm going to do one more. My kid's freaking out upstairs, so school starts on Tuesday, so let's do one more. Just going to scan around, look for something interesting. New lows or hitting them on Tuesday. KHC, CGIS, then on Tuesday. Many more hitting new lows, yeah. Yeah, things are hitting, there are plenty of stocks that are hitting new lows. Let me see KHC. Yeah, look at that. It's interesting. I mean, that's the thing. You've got the market. You look at a lot of these stocks, they're rolling over, heading, making new lows or heading down towards COVID lows, things like that. And then you've just got like 4 or 5 stocks, the FANG stocks, that are just kind of hanging in there. It's only going to go on for so long. There's only so much money that's going to go into those. And then if the rest are going down, they're going to sell those FANGs. I mean, that's the way I'm leaning, at least. GE. Yeah, we can look at GE. All right, this is my last one, guys. GE still looks like an objective short. You've got a bearish rising wedge. You have negative divergence. You have a breakdown and sell signal. Right in there. Definitely that was a big sell signal. You have a breakdown and sell signal. You have kind of a back test. You're just hanging there. So here, okay, here's the thing. It could pop, put in a new divergent high. That could happen. There's no guarantees. It's a sell the rip stock, meaning if it pops, that's objective to short. Okay. Otherwise, sometimes they backtest, sometimes they don't. So it's already broken down. You've already got a break of this trend. So it should play out to the downside. Whether it pops and does the backtest or not, in the future, near future, it should be, down here. The measured target on this one, the best I can do is this. Here's your wedge, widest part of the wedge. So that would say we broke. I mean, really, if I look at exactly where we broke, it's basically right about there. And that would set us up for a move down to, is that right? Let me make sure that's right. Yeah. Yeah, about there, which is a 93.50 would be the measured target. So that's where I think this thing's heading. All right. I think we're going to roll over. And again, it will be obvious when you're down here, but not objective to short anymore. The meat will be, won't be much meat on the bone. So relatively still objective right up in here, even in, objective if you do the back test, So let's just risk reward. This is how you want to analyze trades. If you guys don't do this, start doing this as a practice. All right. One thing is, what's my reward? My objective reward, obviously there could be a lot more, but my objective reward based on the bearish rising wedge pattern is a move down to that 93.50 or whatever down here. All right, or 94, 93.50 basically. So if I shorted on the breakdown, which this wasn't close enough, I wouldn't have taken that breakdown. It's not definitive. You didn't get any follow through. This one here is better. Nice definitive breakdown with follow through. Okay, so that is definitely a sell signal all day long. You take that breakdown there. The reward is roughly a 18% gain. Okay, that's my reward from that position, that entry position. The risk that I see right now is probably a back test, and that would be about a loss or a potential loss of maybe 6%. So that's a 3 to 1. $3 of profit for $1 of loss. That's a great risk reward. You take objective trades with good risk reward ratios, and you manage your risk when you're wrong, stop out when you're wrong. Over the long run, you should make money. So I like it. It looks good. All right. I'll probably add on a back. I have some of this. I don't have a ton, I don't believe, but I'd likely add on a back test, or you take out these lows. Both areas are objective. Objective to short on a back test, or objective to short when you break support. Okay, guys, that's all I got for you today. So I will see you on Tuesday, because Monday is a holiday. So everyone have a great weekend. Rest up. We'll get back to it on Tuesday. All right. Take care. Bye.